It's more or less a case of different strokes for different folks as far as the decision of the Central Bank of Nigeria to retain benchmark interest rate at 14% goes. Local textile manufacturer Michael Adebayo says he'd been expecting a drastic rate cut to enable him access cheap credit to keep his factory running, but his expectation was dashed.
With the current situation in the country, that risk is too high. Virtually globally now, people are operating at single-digit rate.
And it's not just the lack of access to cheap credit that his factory is having to confront. Access to foreign exchange to import raw materials is also a big issue. Not even a recent directive from the CBN to commercial banks to sell 60% of their forex to local manufacturers has made any difference.
Our suppliers have stopped supplying us raw materials. Why? Because we could not even remit all the money we owe them. And they send us a letter and say, come, we know Nigeria is in recession, but unless you pay us, if you don't pay most of the backlog, it will be difficult for them to send any goods to us. Right now, we used to have 4 shifts. We are running only 1 shift now.
As difficult as the central bank's decision might be for local manufacturing, financial analyst Sam Olisa says under the current circumstance, the central bank couldn't have taken a better decision.
What the CBN did is proper, because even with the present situation in the economy, where there is no enough inflow, there is no enough injection of funds. If we reduce the rate, that will not even encourage the banks. The banks will not even react.
For the central bank, while the decision to leave the benchmark rate at 14% may not be supportive of growth in the short term, this is about checking inflation and attracting foreign exchange inflow. And indeed, the bank says since it jacked up MPR back in July, the country has received over $1 billion in forex inflow, and that the bulk of the forex was used in importing raw materials for local industries. Now, the Apex Bank believes if that trend continues, Nigeria may just be able to wriggle itself out of the huge forex liquidity challenge it is going through at the moment. Deji, Badmus, CCTV, Lagos, Nigeria.